Three stocks I'm buying June 2022 edition. Welcome into this video today, guys. Hard video to make, and here's why. There's about 50 stocks right now that I feel like are good buys in the market for somebody like myself as a long-term investor. So I'm looking out at the market right now and I see deals all over the place, stocks I love for the next 3 to 5 years. And it makes it kind of challenging because I'm trying to narrow the list down. So what I'm going to give you guys in this video is 3 stocks for sure buying in the month of June. And then I'm going to give you 3 stocks that I'm going to probably buy in the month of June. There's probably going to be ultimately 7 to 10 stocks I end up buying throughout the month of June, I would say. Now, in this video, you're not going to hear about Honest, OTLY, Tattooed Chef, TTCF. Those are 3 automatic buys for me. Okay, like those are just automatic buys for me this month. But I've been talking about those stocks, I feel like, a lot, and I mean a lot the past few months. So I figured I'd reserve this video for 3 other stocks I'm planning on buying in the month of June. So yeah, I hope you guys enjoy this as always. And let's jump right into this. The first stock of the bunch is Shopify stock. So Shopify is a stock that has gotten absolutely obliterated this year. I think obliterated is the perfect word to use. This stock is down about 73% year to date. The stock has just been absolutely devastated, right? Under a $50 billion market cap now for this stock. Price to sales ratio under 10. P ratio pretty high. Price to book 4.75. So on surface level, when you look at Shopify, it doesn't look like the cheapest stock in the world, especially, given the price to sales ratio and the P ratio. But given how much growth this company has in the future, it's actually very, very cheap now. Okay. And so, that's where stocks can sometimes be deceiving, because you look at the stock and you see it down 73% year to date, you would automatically assume it's cheap, right? But then you look at the metrics and you're like, no, the stock looks expensive. But when you understand the long-term growth that's going for this company, it actually is like a steal deal for anybody that has a longer-term outlook. But a stock like Shopify, let me be very, very clear about this before I get into all about their business model and why this is a game changer and how they're going to stack up against Amazon and how their business model is ultimately going to be one of the most powerful business models ever built. Let me say one very, very important thing before we get into all that. And that is very important thing is this is the exact stock that the stock market does not want right now. And the reason being is it's higher valuation. It's more of a growth company. Obviously, it's clear it's Shopify. It's a growth company, right? And so this is not the type of stock the stock market wants right now. This stock gets thrown out in this sort of market, right? And that's why this stock is down 73% year to date. The stock market right now wants oil and gas stocks and healthcare stocks and very, very, boring stocks that honestly people really don't want for the long term, but they're willing to jump in because of a scared market, right? Now, as soon as the market goes risk on again, a stock like Shopify is going to, as they say, fly to the moon. And the reason being is that's the type of stock everybody ends up wanting to hold. But given the market we're in right now, the market conditions it's not, for myself that's, buying these stocks and loading up on shares that's planning on holding them for the next several years. For me, I don't care what the market says or what the opinion of the market is for the next 3, 6, 9 months. That doesn't matter to me at all. They can sell the stock off to 200. It doesn't matter to me. I'll just load up on more shares. Okay. Now, in order to understand Shopify, you really got to understand what differentiates somebody like Shopify versus like an Amazon, for instance, right? So obviously those are the 2 big dominant e-commerce companies in North America, right? So if you're looking at somebody like Amazon, if I had a business, so let's say I wanted to have grill brushes made in China or whatever other country, right? And I buy these grill brushes for like $2 or $3 or $4 or whatever. And then how am I going to sell those grill brushes? Well, the best place to sell them honestly is Amazon, right? Because Amazon has this massive marketplace and then it probably has, I don't know, who knows, tens of thousands of people, maybe hundreds of thousands of people every day on Amazon searching grill brushes and buying grill brushes off of Amazon, right? So I'm going to want to be listed on Amazon. I'm selling a commodity type product at the end of the day. I need to be on Amazon. It doesn't make sense for me to set up a Shopify store and then run ads to my Shopify store to try to sell it. It doesn't make sense. I'm selling a commodity product. I need to just be in front of the most customers possible. So I'm going to go to somebody like an Amazon to do that rather than like a Shopify, right? So I set up this business. Amazon can handle all the inventory and things like that. Amazon makes all their fees in that cut, but it's fine. I get access to Amazon's big, huge customer base, right? Now, there's a lot of issues with Amazon. One is I don't control the customer. And so if I'm building any type of business that's not selling a commodity good, well, it's kind of important that I have the email because I probably want to sell that customer other products over time, right? So Amazon's not the best for that because Amazon holds all the data. Amazon has all the access to all the customer information, not you. Amazon's trying to make the customer happy, not trying to make you happy, the seller on Amazon, right? And never mind that, Amazon could end up competing with you over time. So for instance, I typed in AAA batteries into Amazon. And look at this. Of the first, main line there that's not sponsored things, guess who gives themselves preferential treatment over everybody else? Amazon. Right there and right there. Preferential treatment. And guess what? Amazon's undercutting the price of the companies that also sell on there. They're undercutting price of Duracell. They're undercutting price of Energizer, right? Isn't that interesting? And so that's one of the flaws of Amazon is this is a company that will likely end up competing with you over time and will end up stealing sales away from you, Energizer, Duralast, whatever other companies are competing with Amazon, right? And so Amazon definitely has its pluses, but it doesn't have everything, right? A business like Allbirds, for instance, right, that's built this really good business model around selling shoes and maybe some apparel products and things like that, right? This is a company, like if I want to build an actual business, right, that's not just trying to buy a little product from China or something like that and then try to sell it. If I'm trying to build a brand, I've got to use Shopify for that. And guess who's a customer of Shopify? Allbirds is. And so if you're trying to build an actual brand, you need to have all your customer information. You need to have your own system set up and everything like that. And Shopify can run that entire back end for you, which is absolutely beautiful when you control all your things. Because if you're Allbirds, you want to know exactly who's buying your product, where they're buying it from. You want to be able to email them or text them other stuff in the future. Hey, we're having a sale on new shorts that just dropped or something like that, right? If you're a business model, let's say like Good American, which is a jean brand, guess what? You're going to want to have a Shopify store. And guess what? Good American does. And so there's a lot of pluses to being on Shopify versus Amazon. If you're a Good American, you're selling on Amazon, you're just another commodity jean brand. If you're selling on your own website, you're your own brand, right? That's much more powerful and you control all the data and access to all that. So there's different use cases for listing on Amazon versus having your own Shopify store and things like that, right? Let's say I was going to sell, let's say I was going to sell Holy Smokers mugs, right? Holy Smokers, this ain't no jokers mugs. I'm not listing those on Amazon. I'm not setting up Amazon listings for that. I'm going to start a Shopify store. Like that's how it goes. Okay. Now, this is arguably the most powerful thing about Shopify. And they basically have almost, I don't want to say stolen an idea from Amazon, but this is brilliant. And it's amazing to see this play out. And what this is essentially is Amazon owns what's called AWS. All right. Now, AWS is the backbone for essentially, like many of the apps and websites you guys use on a daily basis. The backbone of that is usually Amazon Web Services. And Amazon Web Services is beautiful, very profitable business model for Amazon, essentially, that runs like half the dang internet in the developed world. It's amazing, okay? But what Amazon's done so successfully is you can come in as a very, like a startup, right? Like for instance, Hungry Bowl. Guess what our back end is? Amazon Web Services. We're on AWS for Hungry Bowl. So we're a new business and, a very small app that I have, right? Hungry Bowl. And we use AWS. But as you grow bigger and bigger and bigger over time, AWS is going to make more money off you and more money off you and more money off you. So somebody that's small, like we are, right? They can make money off us. It's a small amount, right? But as we get bigger and bigger and more successful, they'll make more money off us. So it's kind of a beautiful business model where it's not like you already have to be some huge company to use AWS. No, you can be small. And as you grow, right, AWS is going to make more money off you. So it's very, very brilliant. And this is why AWS revenues have scaled to massive levels over the past 7 or 8 years. You look at this business, AWS, it was a $3 billion business in 2013. Last year, it was a $62 billion business, okay? It's incredible. And Shopify basically has created this same type of business model, but for e-commerce. And that is in my opinion, if you're talking about the switch that flips in somebody's mind and really starting to understand how powerful Shopify is going to be, I think this is the best way of understanding this, because you can set up a Shopify store as a very small startup, new business, right? And it's cake, right? They have like $29 a month plans, $79 a month type plans, $299 a month type plans. So even as a startup, you can easily set up a Shopify store and be able to afford that, right? But the big thing is, as you become a bigger and bigger company and you have more needs, Shopify can be there for you as well. And they've already got, basically the backbone of your company is running on Shopify as an e-commerce company. And now Shopify has Shopify Plus, which starts at $2,000 per month. And obviously for the bigger and bigger business you are and the more and more needs you are, Shopify, you could be paying them $10,000 a month. You could be paying them $50,000 a month. Like, it all depends, right? But they are the backbone of your business. And so you're much more likely to stay with Shopify, no different than Hungry Bowl. If we, continue to build that and make it a big, big business, soon, someday our AWS bills could be $10,000 a month. $30,000 a month, depending upon how many users are using that and how many, how many different things we're running on AWS and things like that. So that's the beautiful thing about Shopify's business models. They basically built AWS, but for e-commerce. Very, very cool. Okay. Now, Shopify also very, very forward looking, and they want to make their sellers, right, the people that use their customers at the end of the day, they want to make those folks' lives as easy as possible. Now, Amazon, they don't care about making your life as easy as possible. Amazon's going to do whatever it takes to make the end customer the happiest. And so if Amazon's like, hey, we're doing 2-day shipping, or Amazon's going to make any move, it's a dictatorship at that company, right? If they tell you as a seller, you can't do this or you got to do this, you have no choice. There's no arguing back and forth. It's like, yes, daddy, we will do what you want. Shopify has a very, very different outlook. They say, we're going to give you these options here, and if you want to take these options, you can for your business model. And so it's a very, very different experience, if you're a seller on using somebody like a Shopify versus trying to sell on Amazon, for instance. Now, Shopify announced this recently. They acquired a company named Lefebvre, a San Francisco company based e-commerce fulfillment startup for $2.1 billion in cash and stock. The deal rumors, which is, was reported in April by Bloomberg, is the largest acquisition in Shopify's history, and Shopify founder, CEO Toby, says that it will enable the company to create an end-to-end logistics platform for millions of merchants. And Shopify is always focused on being asset light, whereas Amazon's a little more asset heavy when you think about everything that Amazon has in their warehouses and the massive amounts of direct employees and things like that. Shopify tries to be much more asset light. And so ultimately what I think that will build out for Shopify over time is a company that does much less revenues than somebody like an Amazon. Like, Shopify is never, in my opinion, ever going to beat Amazon's revenue numbers. But can Shopify get to a stage long term where the company's actually more profitable and actually has a better net income than Amazon? I think it's definitely a possibility long term that they can actually get to that sort of place because of the way they're building this business model. Now, whenever you're looking at a company like this, right, it's very, very important, and I mean very important, to look at who's leading that company. Management teams matter, and specifically CEO. And I can tell you, this Toby guy that leads Shopify, I think he's the next kind of game-changing CEO out there. Whereas, he's already been a game-changing CEO, but he's not put in that same conversation as a Bezos, as a Musk, as a Steve Jobs, folks like that, right? He's hungry. He's only like 41 years old, so he's actually super young. Where somebody like Bezos is now, I don't want to call him retired, but he's basically retired now. And he wants to just enjoy life, and good for him. He's built an incredible company in Amazon. Whereas this Toby gentleman, he's still as hungry as ever, and he's very focused on trying to make Shopify into a big Goliath beast, right? And so he's still on the come up, and I like that as somebody that's buying into the stock, right? And planning on buying the stock for quite a while. I like a CEO who's fairly young, and he's just kind of getting into his prime. The prime as a CEO is really age 40 to age 60. That is your prime. And so he's just at his beginning of his prime, in my opinion, of running this company. And I look at what he's built so far, And it's nothing short of being genius, like absolutely genius, the way this business model is being constructed. I look at the deal for this deliver and everything that's just lining up. I'm just extremely, extremely impressed with everything he's doing. And I think he's that person that's maybe grouped into like the B-list CEO right now, whereas I think, in 5 or 10 years, we're going to look at it and be like, oh, he's on the A-list. He's respected like those other guys are respected in terms of like being business legends, right? Now, in terms of Shopify's growth, this is a company that should be growing anywhere from revenues 25% to 35% a year. Essentially for revenue. So, I don't know when Shopify stops growing, but I don't see it happening anytime soon, especially in this decade. I think this is going to be a 25 to 35% grower a year in and year out. With their recurring revenue streams, it's beautiful. And I think their retention is going to be extremely high with their customers as well. Now, as far as EPS, here's the very, very exciting thing when you see EPS, because think about this for a moment. Like what's made Amazon such an attractive stock, specifically the past 5 to 7 years. Okay. Amazon's, been a public company since the 90s and, was a great stock for a long time. But specifically, there was a game change that happened probably about 6 or 7 years ago for Amazon. And what was that game changer? Well, that game change for Amazon was the profitability line. The EPS started to go up massively as AWS really started to scale over the past 5 to 7 years. And so that made Amazon much more of a profitable company than a lot of folks, even myself, had ever anticipated. Okay? And so it wasn't just this is some revenue company that is burning cash. It's also like, oh my gosh, this is a huge revenue company that's also making money hand over fist now. And that's how they grew from being $100 to $200 billion market cap to a $1.5 trillion market cap. That's how Amazon did it, okay? And so now when you look at Shopify, what's very, very important is the EPS, because here's what's going to happen with Shopify. Over this next 5 to 10 years, their EPS is going to actually, in my opinion, go up at a much more substantial clip than actually their revenue is going up, okay? And so in my opinion, if Shopify is going to see 30% rise in revenue, I think they'll see a 60 to 90% rise in earnings per share. And that's a game changer for business. If basically for every 1% they grow their revenue, if they can grow their net income 2%, 3%, that's when you're talking about a game changer company. And I think that's what we're going to see play out in Shopify over this next decade. And so that's going to take Shopify, all of a sudden, this business that's also doing $2.67 of EPS to $5 of EPS to $10 of EPS to $13 EPS to $17 EPS to $28 EPS, right? And obviously, Shopify is always going to command a pretty heavy forward P. I would guess, a forward P of 50 to 100 will be pretty customary for Shopify for many, many years to go in the future. And so if you're talking about this company is all of a sudden earning $20 of EPS, go ahead and slap a 50 forward P onto that and tell me what the market cap is. Okay. So, go ahead and slap a 100 forward P. And so, with a company like Shopify, that's not going to stop growing anytime soon. They're always going to command a very, very premium valuation, no different than Amazon commands, obviously, a very specific, forward P on that stock and current P and things like that. Number 2 stock up here of these stocks I'm planning on buying in the month of June is Google McDougal. So, a fairly simple one. I feel like I don't need to go as in depth with Google as I did Shopify there, right? At the end of the day, I'm getting the Google search business, which is still just a behemoth. I use Google search, I would say at least 5 to 10 times per day. Now, I'd probably use it much more than the average person because I'm not just using it for personal, but I'm also using it for business, right? Because I've got to search things for companies, things that are going on. 5 to 10 might be light. I probably use Google maybe 15, 20 times a day, to be quite honest, right? You're obviously getting the YouTube platform, which is just a behemoth that just continues to get bigger and bigger and bigger. You get Android, which is the biggest OS out there for phones, bigger than iOS. And you get the cloud business, plus you get other businesses as well. But that's their core. Like that's why I'm buying the stock is that right there, right? Now, the stock's been hit. This is a valuation play, to be quite simple. The stock's trading at a P ratio of 20 right now. 20? Come on, this is Google McDougal. That's far too cheap for this sort of company with the sort of growth rates that Google has over the coming years, right? Now, if you look at the balance sheet at Google, it's something to be marveled at. Like, they should put this up in the Hall of Fame of balance sheets. It's incredible. $133 billion in cash and cash equivalents and short-term investments, $26 billion in long-term debt and capital leases, but almost all that's capital leases right there, okay? So, I think it's silly that nowadays they have to include that into long-term debt. It's like, it's a lease at the end of the day. Like, you're really putting that in long-term debt, but whatever, okay? So 26 there. Common stock equity, $254 billion. This is one of the top 5, if not top 2 best balance sheets you'll find in the world of any public company. Absolutely extraordinary. Just like I said, it should be in the Hall of Fame, okay? Now, what you're looking at here, it matters in a very meaningful way. And the reason being is everybody looks at Google and everybody thinks, and this is a false assumption, but what people think when they think about Google is they think there must be a stock that's best days are behind it. I mean, it's so established now. It's been around for such a long time. It's not like Google's some new company, some new age company. They think that Google's days must be behind it, right? And that's just a false assumption, essentially, at the end of the day. The fact is Google's best days are still many, many years ahead of it. This is a company that this year is expected to grow 15%. Next year expected to grow 15%. 31 analysts on average cover this company, right? This year expected to do $111 of EPS, which is kind of like a downer year, but that's kind of what's going on in big tech this year. Coming off the insane year all these companies had last year, this is kind of like a downer year, and that's why all these stocks have been hit so hard. Is kind of like, this is like a boring year for all these companies, essentially, okay? But next year expect to get back on the right track to $132 of EPS. So this is a company that, yeah, this is another one of those that it's like, when does Google stop growing? I'm like, at some point Google stops growing, but it's not in this decade. With everything that's going on with Google search, with YouTube just getting bigger, with the cloud just becoming more and more important. They are a big cloud player. They're not like an AWS type player in the cloud market, or Microsoft, but they're still a big player in that market. Android continues to just be the biggest OS out there when it comes to phones. And so when you look at all these things, plus all their other businesses, it's hard not to be bullish on Google over the coming years, and especially at the valuation the stock is at. That was the biggest thing, right? We talked about the valuation just being far too cheap when it comes to Google McDougal. Alrighty, guys, the third stock up here, and then we'll get to the stocks I'm going to probably buy this month, in the month of June 2020, is PayPal. This stock's under $100 billion market cap right now. 3.8 price to sales ratio on this one, a 28 PE ratio, and a 4.8 price to book. This stock has been leveled this year. Leveled, down 56%, okay? Now, before I get into the numbers and things here with Google, or with PayPal, like, why is it so many of these NASDAQ companies have been absolutely obliterated this year, okay? Few reasons. One is they came off of a year where their numbers were ridiculous, 2021. Now they have to lap all those numbers, and a lot of these companies just, it's hard to put up those sorts of 2-year comps, essentially, right? And so you had that, you had stimulus go away, you had at home go away, essentially. So that hurt all these companies for their 2022 numbers. That's one of the reasons all these stocks have fallen massively. Simultaneously, the market has wanted to go completely risk off. And I mean completely risk off. And we're not just talking about the Shopifys of the world or even unprofitable companies. We're talking about even companies like Google and PayPal and these sorts of stocks, right? Amazon. And so we had the stock market just completely go away from these companies and say, we don't want any piece of them. We just want to hold an oil stock or gas stock, right? Which once again is just laughable because no one wants to hold the stocks long term. But that's the market we're in right now. And so you've had all this go on, and this is why these sorts of stocks have just been absolutely devastated. Now, these stocks have shot way too far to the downside, but it is what it is. And it's just like, for somebody like myself as a long-term investor, it's just like, shooting fish in a barrel here when it comes to PayPal. So PayPal has the number 2 and the number 3 most popular finance-related apps in all the developed world. They own PayPal and they own Venmo, right? So they are the big dog when it comes to, if you're really talking about being bullish on fintech over time, it starts and ends with PayPal. Like, bottom line, everybody else is everything else, right? Crypto brokerages and exchanges and stock brokerage and exchanges and all these different apps and the traditional banks and all those things. Like, at the end of the day, if it comes to fintech, Like PayPal is the most direct beneficiary if fintech continues to boom over the coming years, which it will. And PayPal is the best player in that market. It is the safest player in the market. And honestly, it has probably some of the most upside in that market over the coming years. Square also is in a really good position, obviously having Cash App number one. The only thing is they're kind of stuck as like a one-trick pony, right? And so they don't have anything to fall back on, where PayPal has PayPal, which is going to continue to thrive and be here for a long time to go in the future. But I also have Venmo as a fallback. Square doesn't have that sort of fallback, right? So they just continue to be in a phenomenal position. Now, when it comes to PayPal, here's the deal. This year is expected to be lame. 11% growth in revenue. That's a lame year. And that's why, a lot of people have jumped out of the stock, just one of many reasons. Next year expected to go up to 16.5%, which is huge. Whenever you see a reacceleration of growth in a company, usually the stock price in that year follows, and you get a pretty massive move nonetheless, okay? Now, EPS expected to go down this year. Once again, it's a lame year and just, not the best situation, right? Next year, 48 analysts cover the stock, by the way. Expected to go up to 484 as far as EPS. So essentially, 2022 is kind of like, it's a perfect year to be a buyer of this stock. It's down massively. All the numbers are for PayPal's sake, pretty darn lame, and everything's expected to get better in 2023 and moving forward. So I look at a company like PayPal and just really, really darn excited about this one, okay? Now, when it comes to valuation, guys, here's the situation. The stock is disgustingly undervalued right now. And I mean, disgustingly undervalued. The stock's trading at a 20 21, somewhere in there, okay? Here's the deal. This stock usually trades at a 35 to 65 forward P. Now, I'm not going to say it should ever trade at a 65 forward P moving forward, but the fact is that's where the stock usually trades at, a 35 to a 65. So in my opinion, it's going somewhere in that range again over the coming years. And so this is why I believe PayPal is going to go on a pretty beast run over the next 2 to 3 years. I think the stock price is going to double up, if not triple up, over the next few years. And, all of a sudden the stock's going to be a $200+ stock again. And people are going to be like, holy smokers, this ain't no joke. PayPal was right there for us. It was such easy money, and we just missed it, right? And so, yeah, I've been starting to invest pretty darn heavily the last few months in PayPal, and I plan to continue to buy this stock because, there's a lot of stocks I feel like are pretty easy money in this market for a long-term investor like myself, but, there's very few that take the cake over PayPal right now, okay? All right, guys, let's get into the probably stocks up here. First probably stock is Meta, Facebook. You're talking about Facebook platform, Instagram platform, WhatsApp. You're talking about Oculus, the metaverse opportunity, one of the top 10 best balance sheets in the world, great income statement, cash flow. They've been adding employees and spending on capital expenditures like crazy. They're pulling back on that right now, which I think is going to, have this company emerge in 2023 and in future years, emerge as much more of a profitable company than we've ever seen in its history. I think its net income is going to hit records like you can't even believe in 2023 and 2024. And stocks obviously been hit heavily. I can't believe I can pick up shares under 200. I'm just still in shock of that. I really never thought I'd be able to pick up shares under 200 of Meta again. The fact that I am is just, I'm just thankful. That's all I can say. I'm just thankful. The PE ratio is under 15. It's just silly. These are the sorts of prices we're going to look back at in a few years from now, probably even shorter than a few years from now, but specifically in a few years from now, we're just gonna be like, can you believe that stock was trading at that cheap of valuation? What were people thinking? But that's the market we're in right now, and it is what it is. But when it comes to Meta, that's just gonna be, very, very easy money, I would call it, over the next several years. So yeah, that's probably, I actually picked up some shares last week of Meta. So gonna likely buy more shares there. Okay, the second stock of these three probably stocks is actually Avant Brands. Small cap, super small cap, my smallest market cap. This stock is interesting. First off, it's held up really darn well considering the market we've been in, right? I mean, the stock's done better than the NASDAQ's done this year to date for such a small cap company. You would not expect that. The smaller cap the company in this sort of market that's been bad, the best way to describe it, bad, you would think an Avant would be down way more in the market, like double or triple. And that stock's done better than the NASDAQ's done. That's just absolutely amazing. I think at the end of the day, the reason being is the numbers have been extraordinary. Like you look at their last quarterly report, is ridiculous. And that's not even the most exciting quarters that are coming. The future quarters are the much more exciting ones. And so I think that's why that stock's held up so darn well in this sort of market. And yeah, I'm going to likely be a buyer of that stock. I can't add a ton of shares to this one because it is more speculative of the stocks I hold. It's not like, some of these other stocks that are, just easy peasy money. But the balance sheet's in a phenomenal place as well. And in that space, the balance sheets are a mess right now. Okay. So yeah, I absolutely love Avant. And yeah, it's going to be a stock I probably end up buying more shares of. Now, before I get into the last probably stock here, if you guys want to check out my private stock group and join us in the private Discord chat, get access to all the course curriculums, the financial statements, everything like that. And, get in there with the 6 and 7 figure members and myself, check out pinned comment down there and apply to become a member of there. I'm sure you will absolutely love it. So yeah, that will be pinned comment to apply to become a member in there. Okay, guys, the last of the probably stocks. Hey, we talked about it at the top. It's Amazon. At the end of the day, there's plenty to go around for Amazon and Shopify to succeed. And for Amazon, it's their e-commerce business. It's AWS, which is the backbone of basically the entire internet. And I look at AWS and e-commerce is just, those businesses are going to get bigger and bigger and bigger. AWS is not shrinking anytime soon. And the Amazon's e-commerce business is not shrinking anytime soon. Those will just continue to get bigger and bigger and bigger. Plus they own Twitch and Whole Foods and a ton of other businesses. And the company just continues to, be at a level that I think what's going to be really interesting here with Amazon is I think kind of like Meta, I think they're going to actually lay back on hiring a bit. And I think we're going to see that play out over the next 12 to 24 months. And I think they're also going to lay back a bit on capital expenditures. I think what's going to end up emerging here is an Amazon in 2023 and 2024 that once again is hitting net income and margin levels that we can't even believe. Like it's like, holy smokes, like they're hitting these type of numbers. And plus they'll be coming off easy comp years. Oh my gosh. And so I think it's going to be a pretty fun ride in that one. And I'm not traditionally an Amazon shareholder, but now look at me. I'm an Amazon shareholder and I just started buying some shares in the last couple of weeks here. And I'm going to likely be adding more shares in June of 2022. Alrighty guys, that was a beast of a video there. Hope you enjoyed it. Much love as always. I appreciate you joining me. Once again, if you want to join us in the private stock group, the private Discord chat, that will be pinned comment to apply to become a member in there with us. Much love and have a great day.